I wasn't actually planning on sharing this, but or at least not planning on recording this. But since we take or make use of some shit that is not been trained yet, like the real order blocks, and from the real order blocks we dissect the real breakers, because this is a refined breaker. We are on the 1 minute now, and I don't I have no idea if we go up or not. But what I did was I traded the low of the breaker to the high of the breaker. So you see, I got out here and I got in when once we rejected the low of the breaker, and now I'm just gonna move my stop loss to. Did we trade that one? Let's see. Here we move up, move down. There. Oh yeah. I don't want to lose. So let's say I took a small profit here. I sold one lot and I entered with three. So let's see, what did we have? 38 a buck. So I don't want to lose more than 38 bucks. Well, let's say 26. Now let's see if we break the order blocks. Because if we do, then we have a new breaker. Now we had a breaker here already. So this one took out previous candle and then traded below the last swing low. Yes, it did here. And now it broke to the upside. So this was a valid order block the moment it got closed below. And when it get traded to through, I'm sorry, it becomes a bullish breaker. And that's what I traded in the previous zone also. So now we reach the new, if you want to go 100% safe, you could have taken a little bit off as soon as we touch this bearish OB. If you're more like a daredevil, you can trade the 50% of this one, or even wait for the rejection block if it trades to that. But I don't know. A safe bet would have been take a very small portion off, let's say 50,000 or something, or which is half a lot. Because if it does all of a sudden just trade down, well, you're just giving away quite a few pips or pipettes, because these are, I don't even know what move this is. It's not a big move, but let's see. But we don't need big moves as long as you understand price action. So this move was well, pretty significant, 28 pips. But this move was very small. This was only 11 pips. But like I tell you, or told you before, that well, you only need 10 pips. Now you see what I mean with that you could have taken a small portion off over there, because now, well, if you're lucky, we trade back to the breaker. If you're not lucky, we're just gonna go for lower prices here. But for now, I have a sort of anticipation that the breaker will hold, since we are in a, well, series of breakers down here. And my expectation is we're going for this old high. That's why I marked off this old high, which is a, I believe it was a 15-minute old high. Yes, it was. So we took outside liquidity here. And now we want to trade to inside liquidity, but there is no fair value gap here, except for there is still a open gap in this zone. So this is the open liquidity, which is the rest of a bearish fair value gap. And I anticipate that price will go at least, well, maybe not take out this old high, but at least make equal highs than here, but we will see. My trades were already set, like I showed you in the beginning. If you go to the 5 minute and you look at the sub 3 zones, and I take it you know what a sub 3 means in our quarterly strategy. That's our distribution zone, and well, that's where we like to enter trades. So here's our sub 3. This is subsection 4. So there is a chance that we reverse. So the section 4 can give you a continuation, in which case we will probably go to this fair value gap. And if it takes creates a reversal, and we will know soon enough now, then we'll probably go well deeper into this fair value gap, and maybe even take out some liquidity. I don't know if there's some liquidity. Yes, there is still open liquidity here. So here we have a inverse fair value gap, like it's called. Oh, we traded that one. Okay, well, it just adds to my expectation that we might go for this liquidity here. But, well, like stated before, nothing in price is for certain. It's all probabilities. And I just trade the breaker probability in this case. And we'll see what happens. But I don't really care too much, because I had a beautiful entry here, traded it to hold on to the through the London lunch, and I just got out in time for this move up that would have taken a lot of my profit away, and so I closed my trade from the morning session here, and this was my entry for the mid or the afternoon session, and took my profits here because there was a PY zone up here, and there is a rejection zone up here, because this is a 5 minute rejection block up here. But let's remove that, otherwise we get too much stuff in our charts, and we like clean charts. And the other thing is, well, we didn't quite trade to the 59, but in combination with a breaker, that could be okay. We at least traded through the 0.5, the CE level of that move. Okay, so this is for the quarterly, and you can check your PD arrays if you just hide all the quarterly stuff and you look for your PD arrays. Did we break down? Yes, we broke down. Do we break up? Yes, we broke up. So as a lesson or a rule, if we break down, follow with the FIB. As soon as we enter a sell zone, look for sells. If we break up, as soon as we enter a buy zone, we look for buys. But in this case, we have a mixed sentiment, because this is our down move. I'll draw it in just a sec. So this is our down move. We're going to get a lot of stuff on the side chart this way, but so this is our sell zone, and we touched the sell zone, and this here is our buy zone. And you see we entered the buy zone also. Where is my lowest point? I don't know. This is my lowest point. Okay. You see we touched the 50, but we did not close below the 50. And I don't know what time is it. It's okay. 1.5 hours left, because we are now entering subsection 4 in, well, we are already entering subsection 4. So let's look at the 1 minute. What are we doing? Are we continuing our expansion up, or are we gonna reverse to the downside? It's still not very clear. We did trade the breaker here, so let's move this one out of the way. Let's see if we can take this high on, and do we have a valid order block down here? Let's see. First, let's hide all the shit. We at least have a fair value gap here, and yes, we have a liquidity run down here, and then a break of this swing high, and this order block is also traded. And now that's why I tell you guys to mark off these zones with the fair value gaps above them. This is actually the last point of return. It's not a order block, but it is a bullish. It's a buy zone. Sorry, buy zone, but a buy zone on the 1 minute, so it doesn't. It's not very. How do I say this? You shouldn't be too confident that it's gonna hold, but you now at least you can follow price. We have a breaker, we have a bullish buy zone. So now let's see if we can break this one, because now the order block shifted. Did we take out a swing low? Yes, we did. So now this here is our bearish order block, and it looks like it's gonna respect that one. And you see we have a breakdown of a bullish order block, and that turned out to be a breaker, because here we traded, took the liquidity of the candle low, and this was a swing high. We took out the swing high, so this here is a bullish order block, and it got broken here and it got traded back to there. So this is a breaker, bearish breaker. Where are we? Breaker. So now we're inside or in between two breakers. So I think we will go for extra liquidity or even go further down. Well, it was a nice try, but I am not willing to look how far we go. I just, well, you saw my stop loss. I just exited the trade by now, because now we're probably going to go for more liquidity down here, and I'm not interested in sitting that one out. I just figured, okay, we move off the breaker, then I want to be part of this move up to here. I showed you guys the old high. I don't know where it is, but there was an old high here somewhere. I was intending to trade to, but only if it spun off the breaker, and it can still spin off the breaker because it still didn't close below. But I think I'm done for the day. We could just see how price responds to the 59%. Let's see, let's not move it that far. 325, okay. So this is the 59. I take it you guys have already discovered by now. Let's see if we move our on the 1 minute. Are we on the 1 minute? We are on the 1 minute. We're no longer trading the strategy. Well, we do, but trade the quarterly setup. But I am now checking structure. So it's important that you keep those two in mind, and that you're not in a wrong way. And I think this is a bit how do I say this? It's a bit vague. The wrong way. What's the wrong way? Well, that's experience. That you do not mix them up in a wrong way, but that you know when you can use your Fibonacci structure, or your structure built by the shift up and shift down, because on a higher time frame we are still in our bullish move, because we broke an old POI zone, old high from a bearish POI zone, and we are trying to retrace to the 59. And if we do, you should anticipate a move up. But you see here we had a breakdown over here, and that's this one, and it goes all the way down to here. So the same goes for, okay, we have a 59% retrace, and that's what I traded from here to here, and now here I got out at the 59%, and later closed the trade completely. And now I figured, okay, if we're gonna trade the breaker, I want to be part of it, and we do not trade above our breaker. As you can see, if we just hide most of it, there was a breaker here. This is bad. You cannot see this. Okay, let's remove all those lower time frame stuff. Let's see. Let's get rid of all this stuff here, because that's only confusing. If you go too low, you get confused. So this one can stay on. And now we go to the, I believe it was the 5 minutes. I was looking, yeah, for the breaker. You see, we did not close above the M15. I believe this was an M15 breaker. No, it's M5. Could be M15 also, but just check. Yes, it is a M15 also. So this is a higher time frame breaker. We did not really close above. I mean, this is not a convincing close. So we're just waiting how we are gonna deal with this breaker. It could be that we go for more liquidity down here and then trade. Let's see, let's get rid of this one and the drawings. Okay, what's the order block? The big one is this one. So that's the biggest candle. This could be a buy zone, a bullish order block. Why is this a bullish order block? Well, actually, this is the bullish order block, but this is all inside this candle, except for this small part here. So actually, this would be the definition of the bullish order block. If we take out a swing high, and if we count this as equal highs, and equal highs is a swing high, then we take out this high, so that makes this a valid order block. And where do we close above that one? Well, that's this candle, so there is liquidity in this move. And if you are a fair value gap trader, this is our fair value gap. And the stuff that's traded is over here. And then if you look for the CE of the bullish fair value gap, then that's this area, and that is in confluence with the top of this order block. But they can just be in a hurry, and now that they dipped into this one, and just straight up to our old high. Where is our old high? This is not here. Here was our old high. Let's mark that off. Okay, old high. So let's see, what are we trading on the lower time frame? We're just milking the breakers. That's just where smart money invested to manipulate price. So that's why we see a lot of accumulation in here. But I don't trust it to go long, and I don't trust it to go short. So in this case, it's just a matter of when in doubt, stay out. And that could be a very wise lesson also. And if we look to our structure, or at least the 1 minute, the breaks, this is what we have. We come from here, down, up, down, up, down, up, down, up, down, and it looks like we're going for what I was anticipating at the old high. Let's see, where is it? Over here. But like I said, I don't have any appetite anymore. I did nice today. Where is it? It's the 14th. So I had 10, 20. It's 30 and only $56 drawdown. And I made a total of, I don't know, let's see. We are 14. I started at 106 and I am at 109. So 106, how much? 106.6. 106. Okay, I made almost 2,800. That's very nice. A small 3% gain on a Monday morning and afternoon. That's not too bad. Okay, we see we have a breakdown and a breakup. And when you have a breakdown and a breakup in a very near vicinity, that usually indicates that if you follow price with a Fibonacci, as soon as we retrace, this is of course a bullish entry buy. And if there is a fair value gap below the 50%, and there is, there's 1, 2, 3 fair value gaps. Okay, I also told you guys a rule for that. Long, if you have 1, 2, 3 fair value gaps, you're going to enter here, this bottom of the second fair value gap, if you want to trade. But I believe I already explained I have no more appetite to enter a trade. And then you want to go for 2R. 2 up. So that would be a possible setup. And is this, yes, this is in the vicinity of the 59, and it is at least below the 0.5. And if they are in a hurry, yeah, well, they can just trade to the first fair value gap and then take off, but that's not what we trade. We could also look for a 7-step pattern to fail in this case, because we have 1, we have 2, and then we have the liquidity here, and then we break and we go up, then this order block should hold. Okay, this order block should not give way for a 7-step pattern. It's a bearish OB. So there are a lot of contradictions right now, and I already told you it's not a very wise thing to enter a trade right now, but if you have nothing entered yet and you're on hot coals, you want to enter, okay, let's just, I told you here we had an entry to the pipette if it's now moving up, but this was at least the entry I was telling you about over here. Nothing hindsight about it. I just told you guys you could enter on the low of this fair value gap here. Actually, it was this one, and you need to add the spread. I don't know what the spread is, but 0.2. Okay, 0.2. That would have been your entry, and this is your stop loss, and then add the spread, which is 1, 2. Okay. And then you want to aim for 2R, which is somewhere over here. Well, do we break our 7-step order block? Starting to look like it. Now I want to see a fair value gap. A bullish one be created. Okay, we're almost at our 2R. This is a zone where you could, probably take some off if you were in the trade. At least move your stop loss. Why? Well, we took out this high, so that's our rule. We move our stop loss to break even now, or take something off, like I said. But in this case, let's just move our stop loss to break even. And remember, this was our 2R. What time is it? 5 minutes to, okay. Almost the official open of the London close. what do we need to take? What level? 30553. Okay. 30553. 30553. That's the one. I'll just wait for either a break-even trade or the fact that we take our 2R, and then I will shut this short tape reading session, which wasn't actually planned, but well, I hope you guys learned something from this. Okay, this is an order block. Why? Because we took out previous candle low and trade closed above, made a fair value gap and took out the previous swing high. So this candle should hold. That's why we move our stop loss to break even, because this candle here should absolutely hold here, and if it doesn't, then well, we have our stop loss over here to protect us for any moves in a not anticipated direction, let's call it like that. And this is of course a bullish order block. We're approaching our 2-hour trade. And there we are. No need to wait for the last pipette. It's not about being right. It's about making money. So you would have closed your trade or took your partial right now here at this level, because there is a possibility that price just immediately, what time is it? Oh, it's still 4 minutes. Well, let's say we took a partial. We had a very tight entry, as you can see, and maybe took a half off or something and see what the rest will do. At least we made a small profit. And as I said, I would stop the recording when we took out our 2R, and we did because this was our stop. There we are. Well, our 2R is secured. I believe it was 2. Yeah, there it was, 2R. And now we have taken half off, and we let the rest run to, well, where do we let it run? Well, to our old high, because that's actually my initial, was my initial target for actually this move here. Okay, I hope you find this useful, and it's all, the only thing I do is how do I say this? Applying, yeah, that's the correct word. Applying the stuff I taught you guys in the 28 day to 100K challenge. And of course, it can be daunting when to use what, but that is experience, and I cannot teach you experience, because experience is gathered by you by doing your homework, making your journals, and that stuff I keep hammering on. That's not to be annoying. That's just to make sure you're going to learn this stuff like I learned it. And by doing this over and over again, you're going to see these patterns just form automatically, and you don't have to draw all this shit in here, because I can imagine that this looks very confusing, but I can just see it happen right here. And one indicator that's very handy and should always be on the chart is the PD arrays, because as soon as we break this one, there's going to be a reaction, the same way that we break this one, we're going to anticipate a retrace and then a reaction to take out this low. If we do this one, we're going to anticipate a reaction, but then I told you guys you have to learn time. Well, if you put in your quarterly, you will see that this is sub 3. Well, at least when we took out this one, sub 3 hadn't started yet. And sub 3 is, I don't know, here. This is where sub 3 is. And now you wait for a fair value gap in the direction you anticipate, and you could have entered 2 fair value gaps. Where do we enter? What did I just taught you guys here? You enter on the bottom of the first fair value gap. So this could have been the entry. Oh, now I need to get the stop loss. Yes, okay, stop loss here. Entry on the bottom of the first fair value gap, and this is your stop loss. And then of course you have to add the spread, which was, well, 2 or something like that. Let's see, 3.2, and then 6.4 would be 2R. So this would have been your trade, and it would be very fine here. And if you enter on the other way, which is with our, I don't have that indicator on, but with our entry indicator, then it would be a fib entry like so on the 59 retracement, which, well, it's a slightly better entry. But you see that these concepts work flawlessly in every setup. And you can mix them, but don't get them mixed up. So this would be a 3R. This is where we aim for a 3R trade, because that's the strategy or the trading plan, whatever you want to call it. So here we would have had our 3R trade, and I just ran it to a liquidity from a higher time frame. So as soon as we entered the breaker here, I took a portion off, and this was already a 3R. And when we entered the CE of this bearish order block, I took some off, and here we traded below the order block, and that's where I closed the trade. And here I anticipated, okay, we did reject the breaker. This is the 15-minute breaker low, and as soon as we closed above that candle, I entered the trade, and I took a portion off here, because why? Well, we took out this high, and I don't want to gamble that we took out this one. Well, I might have been a little bit too early, but if I would have let my stop loss stick around here, probably would have taken my stop loss here. So I just took a small portion off here, and I closed the trade here. But I believe you saw that in the recording, but I'm not sure. It doesn't matter. It's just I'm just explaining the concepts. Okay, well, that's it. I hope you enjoyed this video, and if you want to, if you haven't joined the 28-day to 100K challenge yet, you can. I'm not going to be live teaching you, because the lessons are recorded, but you can enter, and you can move through the sessions, the daily homework sessions, so you can become a profitable and a consistently profitable trader within 28 days at least. You can gain the knowledge to become a profitable trader in 28 days. Well, that's it for now, and well, maybe we see each other and maybe we don't, but good luck and good trading.